Cash secured put strategy. I love the cash secured put strategy. It's something that I am constantly doing. I'm going to tell you a little bit about it. Maybe it's something that you'll like. And I'll show you a simulated trade of using a real stock. But I got to let you know, this is not financial advice. This is for education only. All right. So what it's not financial advice or recommendation. What it is, education. So with that agreement between you and I, we'll move forward into this and we'll talk about the cash secured part. Specifically, what does it mean, cash secured, right? What sort of education can we get out of the cash secured part? Cash secured means having the money to fulfill the commitment. What commitment? The commitment is coming up on the next slide. But we're talking about a cash secured put strategy. So the put has something to do with a commitment, right? We know the cash secured part, having the money to fulfill the commitment. Now the put part is going to be the selling a put option to somebody. And what does selling that put option mean? It means a put option is a contract that allows the buyer, which we're going to sell the buyer, the right to sell an asset at a predetermined price during a specific time frame. I know it can kind of get confusing. We're selling the buyer the right to sell us something else, right? We're selling them a contract that gives them the right to sell us an asset. In this case, we're talking about stocks. We got the put option chain right here. This is well, that slide is over. Now we're into this one. So what is a cash secured put option strategy? It's selling a put option for income with the cash to secure the purchase if needed. That is what it is. And right here, here's an example of selling a put option on AG, right? Strike price of $8.50, taking in 7 cents. You can see a little bit of a breakdown here. Remember that we're going to do a real life example right now on Johnson & Johnson, ticker symbol JNJ. And Johnson & Johnson is offering you these fine products and even more. So let's take a look, a little look-see at Johnson & Johnson. All right, so this is a simulated trading account, right? You can see here, simulated, PM for paper money. So this is not real money, but you can get one of these and you can basically do real trades in a safe simulated version where you're not risking real money. You absolutely should do it. When you talk about education, this is a great thing to do. So these are fictitious numbers. Don't be impressed by these numbers. It's fake numbers. These are some cash secured put options that I sold in previous videos that I made. Maybe you saw those, maybe you didn't. Well, let's take a look at selling a new one on Johnson & Johnson. So the first thing that we're going to do right now is we are going to look at these tabs across here, and we will take a look at what our options are. So charts, we're going to be looking at that, and we're also going to look at trade. First thing we'll do is look at the charts, get an idea of what Johnson & Johnson has been doing for like the last 3 months, and then we will put a trade on. So let's do it. Charts, now we're looking at a 3-month chart of Johnson & Johnson. This is actually a very specific style of chart. Let's take a look at what style of chart it is. Unfortunately, I can't zoom in very well to show you because this disappears. I hope you can see that. This is Heiken Ashi chart. So we're not going to explain what that is. I just want you to know this is something different than a regular candlestick chart if you're familiar with those. So Johnson & Johnson. All right, we see the high here. We see the low here in the last 3 months. This is the 200-day moving average. We see it's trading right around 177. Looking at this Heiken Ashi chart, I think that it's possible that it might have a little bit of downward momentum. We see what happened over here with when it hit the 200-day moving average. So let's look at selling a cash secured put option on Johnson & Johnson down here at the 170 strike price. So we're going to go over here to trade. And you can see Johnson & Johnson ticker symbol is pulled up here, right? There's information there. And we are going to be looking at the puts. So let's zoom out and make sure we're looking at the right options. What we're looking at here is called the option chain. It is different time periods that these options that we're going to be looking at selling can expire in. You see dates right here, and you see the 100 here. That the 100 means 100 shares. When you're dealing in the stock market with options, you're working with increments of 100, right? So one option contract equals 100 shares of stock. So that's what that 100 is about. And this number here is the number of days until it expires. So you can either look at the calendar. For me, I just kind of look, I just look at the number. And depending on whatever you have going on in life, like let's say you're going to go on vacation and you're going to be gone for, let's say you're going to be gone for 15 days. So maybe you sell a 22-day contract, or maybe you sell a 29-day contract. That way you bring in money the whole time you're on vacation. You don't have to worry about putting a trade on, and you don't even really have to worry about it expiring because you're going to be back home by the time it expires. But since it's a cash secured put option, you write that cash secured put option on a stock that you're comfortable buying anyways if you had to. So you're going to be safe no matter what, but that's something you can do. But for us, let's take a look at the 8-day expiration. We're looking at, kind of in a week, a little bit over a week. Let's take a look at that one. So we open it up. Now you see it drop down, and over on this side you see the calls, and over on this side you see the puts. Here's our expiration in the middle. Strike, I have selected all, so these are all the different strike prices. And this number here, this is the strike price, right? Johnson & Johnson is trading around 175, so you can see where it changes color here. In the black is where basically for the put option of where there's some potential value. And we talked about looking at the $170 strike, right? Let's take a look at these numbers, these different numbers here, and try to get an idea of what that's about. So as I mentioned, this column here is called strike prices. These are the prices that we would be selling someone a contract that allows that person who bought it, it allows them the right to sell us, Johnson & Johnson, 100 shares at this particular price. Why does that matter? Why would someone want to do that? Well, let's say if Johnson & Johnson tanked down to 155, do you think that someone would want to sell it to you at 170 if the market price is 155? Absolutely. It's an insurance policy. Now there's other things you can do with it, but that's why someone might buy a cash secured put option from you, because they're insuring their position. So what does that mean? What does it mean in regards to the cash secured part? Well, if Johnson & Johnson is at 170, Johnson & Johnson, one share is, if we are going to be purchasing 100 shares at 170, if we're picking the strike price of 170, because it's cash secured, right? So we got to figure out how much cash we need. We're looking at buying at 170. How many shares? Well, it's a minimum of 100. So that means that we're going to need a minimum of $17,000 set aside in our account in order to secure with cash the put option we're selling, right? Cash secured put option means you have the cash in your account in order to fulfill the commitment that you're legally making. So let's assume we have that. If we look up here, yeah, in this fictitious trading account, it's there. So now what we're going to do is we are going to click Actually, we're not going to click that yet. Let's take a better look at what these numbers are in these columns here. These columns, obviously, this one is bid and this one is ask. Well, what does that mean? The easiest way to remember this is you look at the lower of the two, right? So you can see just a little bit there where it changed color to this kind of purple, right? Because that's 177 at the strike price, 175 here, and then we're looking at 170. So the number that's lower is the number that we can sell into the market at. The number that's higher is the number that if we were to buy this put option on Johnson & Johnson, that's the number we'd be paying. So bid is the number that when you're selling, that's the number you're dealing with, and ask is the number that you're dealing with when you're buying. Is there more to it? Absolutely, but let's just keep it relatively simple. We're talking about selling cash secured put options. You're looking at the number that's lower of the two, and if you wanted, I mean, you could sell any of them, but we're for whatever reason I arbitrarily chose 70, so we're going to look at this at strike price of 70 and getting 40 cents for it. 40 cents. Now you might be thinking, well, Brent, you just said I need to set aside $17,000, and I might have to buy $17,000 worth of Johnson & Johnson stock, and you're telling me I'm only going to get 40 cents for it? Remember, times 100. 40 cents times 100 equals what? Let's verify with a calculator. 40 cents times 100 shares. You could probably do that math. $40. Now you still might be saying, hey, whoa, whoa, whoa. You're telling me I'm going to get paid $40 to risk 170? Yep, that's what I'm telling you. I mean, sometimes it's not necessarily glamorous or glorious, but it is. That's what it is. You could go a little higher, obviously. You know, right here, you're gonna sell closer to the money. To this point, you're getting $125. But remember, also, this is only for 7 days or 8 days. So making 40 bucks in 8 days, or making 100 bucks in 8 days, maybe you have to buy it. But regardless of debating whether the risk to reward and that's the good strike price, let's just go through the mechanics of it. So we're going to click this, and it's going to pull up a little order box here, right? And we can adjust this price. So let's do that. Let's adjust this up. And so when I adjust this up, what's going to happen now, and I put it on a limit order for 1 day, I'm basically going to send an order into the market that tells the market that I'm not willing to do this for less than $45. I'm not willing to do this for less than 45 cents per share. Now let's say if it goes through, then if it goes through, this is what we'd be looking at. You know, max loss. Why is it not $17,000? Because it's just 45 minus that 17,000. We got a credit of $45 minus a small commission. This is what our net take in. It affects buying power and things like that. And then we could send that in. And one last thing. So we click send. We see it went through here. Look over on monitor. And now we can see it right here. Now, this is using Thinkorswim. It's a particular trading platform with TD Ameritrade. You can use anything you want. You don't have to use this. You can use any broker that allows you to do it. I want to leave you off with something. If you like finances, and you like not just finances, but you like finances and you like achieving, then consider getting these 3 underused tactics to transform your financial results. It can be implemented into anything, especially if you are trading. If you're going to pursue the trading path, implementing these 3 tactics over time is going to allow you to have a traumatic transformation. But you have to implement them. If you don't implement them, they don't do any good. They might sound good at some cocktail party, but you know what? People that only sound good at cocktail parties sooner or later run into people like me that can kind of tell that you just sound good at a cocktail party, and it's sort of a hollow, empty husk of a human being. So don't be a hollow, empty husk of a human being. Get the 3 underused tactics, transform your financial results, and have a great time, and let me know how you like them. You guys have a fantastic day, and I will talk to you some other time.